Yeah, let's do it.
Okay, in the packet that I sent the big, the big ledger sheets that we have, like that you guys all saw when we did like the 2021 budget. And what I did is I took our appropriation sheets that was also in a separate scanned email that I sent, the same email, but it was a different bundle of documents. And I took all those numbers and plugged them in to the sheets. I do realize that I did not do the summary sheets. I only did like each individual sheet. So, and then I also put in there, I think it was the agenda and then a copy of the last meter report that we just got.
Yeah, there were like 4 attachments.
Right. So overall, I think we did extremely well in some funds, and then other funds obviously were lagging because of just COVID. I mean, obviously, big ones to point out. We collected more property tax money than we had budgeted for. So that's always a good thing. One thing we were down in permissive sales tax. You can see where we missed, obviously nobody was traveling. So we only collected $42,904 when we budgeted 60. Normally we're always over 60, but
Hey, Kim, can you refer to page numbers or something so we can follow you?
This is on page 1. We're in the general fund.
Okay.
So we came in slightly less on cable fees. We did very well in zoning fees. So we get budgeted 50 and we got 70. So that was good. Let's see, local government fund. We only budgeted 144, but we got 173. So that was a plus. Liquor permit fees. I'm not sure what happened there. I would think that alcohol sales were extremely through the roof this past year, but we only got like $6,700 when we normally we budgeted 28. So I'm not sure what exactly are the liquors, what's the liquor money that we get? I don't know if it's sales like at each of the restaurants or if it's a portion of the liquor permit. That I don't know, unless somebody knows the answer to that.
Is that something we get from Hamilton County, Kim?
We get from the state of Ohio.
State of Ohio, okay.
But I don't know, like if it's a part, like all our restaurants in the township, when they sell alcohol, do we get a portion of that? Or is it only from like when liquor permit licenses renew? That I don't know.
Well, that would be a good question to dig into for future.
Yep. Agreed.
Yeah. Adjustments and refunds. We got a lot of refunds this year. Workers' comp gave us back all of our premiums from 2019, and they gave us premiums on top of that. So as you can see, we received $109,000 in refunds when we only budgeted 52, which was good. I don't know what the other is. I'm gonna have to dig into that. I can't remember off the top of my head what all the other ones were.
Kim, is that, I was reading the column all the way to the left as the budget you're planning for 2021. Is that right? The 52,900 is for 2021.
Yeah, if you look in the 1, 2, 3, the 4th column over where it says as of 12/31, those are the numbers that I'm reading.
Those are the actuals. I was reading the budgeted as being the one right next to it.
Yep, and for 2020.
So for 2020, we budgeted 0 for adjustments and refunds.
Oh, you're right. I see what you're saying.
Yeah.
Okay. Yep.
Yeah, and you're saying 52,900 for 2021 is your proposal.
Right. Yep.
Okay. Make sure I got that right.
Yeah. On the expenditure side, I think
question on the interest, is all the interest going to be reflected in the general fund moving forward?
No, and that's not a right number. I found a mistake in that. So what happens is we are required to give interest to all of the road funds. So like all the state ones that we have where that's so like permissive motor vehicle county, permissive motor vehicle township, and then we have the gas tax, the motor vehicle license tax, the cemetery bequest fund and the general fund are the only ones that receive interest. So because these special revenue funds cannot receive interest, it all goes to the general fund. So what I did is I took every month we printed a cash summary report that showed a percentage. So like it said for the general fund, 20% of the funds, so that's how I used the calculations. I just took the percentages and went down and assigned interest to each one of those funds. But that number should be 134,000. That's what we got last year.
And what are we projecting for this year?
Well, we budgeted 115.
Okay.
So hopefully we'll get that.
Okay.
So on the expenditure side, we budgeted, I think it's 1.694 million, and we spent 1.4. So the variance there was negative 137,495 was what the difference was.
So for this year, we're going to have a fiscal officer staff salary that we did not have last year.
It's actually not in its own line item from last year, but this year it will be. The
Okay.
UAN had a separate line item just for the fiscal officer's assistant.
We had one previously.
Right. Before last year, it would have been tied up in administrator or administration staff. So like
Okay, but we're
the one-
tracking that separately now.
Yeah. Yep. So unless anybody sees any or has any questions, I'm going to keep moving on.
Are we still in expenses?
Yeah, I just did an overall. Is there a specific question you have?
Well, I was looking more at the 2021 budget numbers. It had other professional services of 12,000. What is that?
That's going to be our newsletter.
And the repair and maintenance is 15.5.
Yeah, so that's going to be for the buildings and the vehicles that we pay for out of the general fund.
Can you remind us, Kim, have we already reviewed and approved that 2021 budget, or is that what we're doing
Oh, yeah,
for
we
this
did that.
meeting?
No, I was just going to go through the 2020 numbers with you because we wanted to do the look back.
Yep. Yeah.
Yeah, but there's still, I mean, you look at repair and maintenance, we only did about 6K last year, and now we're looking at 16 for this year. I mean, now we have the final 2020 numbers we can compare to.
Okay. Well, I can't change it now. We already adopted it. So
I
can make a
understand,
note.
but what I'm just saying that, it seems a tad on the high side.
Yeah, one suggestion, I think we talked about this a little bit last time, is I know when we're trying to set budgets and appropriations so we don't get into trouble where we end up at risk of overspending a fund. What might be good to have during the year, Joe, this is maybe for you and the staff, is periodically to go through and do what I would call a forecast. So you've got, here's what my budget is for the year. Now that you've seen actuals for 2020, even as you go through 2021, periodically we could have a look and say, okay, I've got a budget of 1547 in the general fund. What do I think I'm going to spend roughly? And that might be a way where for some of these items you say, okay, I set aside 15,000 for repairs, but then we can have a discussion to say, hey, if I think I'm only going to spend 7, let's set that as the forecast and try to hit a lower number so we don't end up spending it all, which I think we kind of do anyway, but might be helpful to have that so we have sort of a budget and appropriation that we freeze at the start of the year, and then a number that we're tracking against as you learn more information, so we can, I assume that's what you're doing anyway, to try to get some puts and calls and decide what you can afford here and there. And so that could be a place where, as a finance committee, if you tell us some of that stuff, we can provide any advisory ideas about, should you spend, if you got some extra money, do you spend it on X, Y, or Z, or return it back at the end of the year?
Okay, and just keep in mind too, we went from having like 10 line items to like 50 line items in the general fund. So the tree, you only had one branch and it went to like 15 branches. So that's why I wanted to give it a whole year to kind of figure out like which, how much money do we actually need? Because you can look and see like contracted services. I mean, we had to bump that up because the way we were paying out contracted services before in the UN is totally different than the way we have to pay it out now. It's all under that 360 number. And anytime we hire somebody to do something for us, it's a contracted service. And that's not how we viewed it before. So I just want you guys to keep that in mind.
Okay. The property insurance premiums, it's got 17,450 last year, 18 this year. Is that for P&C for all the buildings?
Yeah, that is for it. Well, it's a portion. So we take some out of the general fund to pay for it. We take some out of the road fund. We take some out of the safety services fund, and we take some out of the cemetery fund, because we have property that spans all of those different funds. So we use the different funds to pay for it based on the percentage of risk. So I put a little bit of an increase in there because obviously we're getting ready to do property maintenance or property insurance at our March meeting, and I don't know what the number is yet. So I had to guess.
Got it. Okay.
And then our mowing contracts came in higher this year than they did last year. So we had to make adjustments for that too. And then the stuff like Hamilton County, I never know what Hamilton County is going to be like for our zoning review. I mean, we budgeted 70 and this year we only spent 47. In past years, we've spent 50 something. Some years we spent 60. It just all depends. So that's why we typically plan high for that one. And if it comes in low, that's great.
Kim, are you going to send us a summary page of all these?
What kind, well, I mean, what do you want to see?
Just, we talked about having a summary page that had each of the 20 pages summarized.
I think we've got that. I was going to ask a similar question, Rick. If I look at the comparisons page, that's, I think, what we talked about, where you show 2020 revenues and expenditures and variance for each one of the funds. But that one says it's as of 11/9/2020. So
yeah,
is
that's
that
the one I did. So I'm going to have to update it and resend it. But when you say summary, what kind of summary do you want? Like,
Just
is
of all
that the one you're
funds.
talking about, Rick?
I don't have that page. I picked up the copies, but I don't have that. But what I think what we asked for was just one page that had here's general fund, here's fund number 2, here's fund number 3. So it gives us just
right. But what do you want it to say? We took in this amount, we only spent this. I mean, I'm just looking for direction.
yeah, it's just a summary, the bottom line from each page on one page. So it gives an aggregate.
When I you that we have that, it's in the very back, but I didn't make a copy of it tonight because I didn't update that page yet.
Okay. Yeah, I didn't get it then. Okay.
Yeah, I'm looking at it, Rick. I think that's what you're describing is what Kim's got on that page. So I think we've got the right information there. We just need it to be updated with the
I picked up the
data.
copies yesterday, so I didn't get that one. Okay, fair enough.
I didn't do that.
Hey guys, this is Larry. Just to be clear, so it's in the electronic copy, that summary page, because I'm looking for that too.
Last page, Larry. Very last.
Can you give us a page?
All right, thank you.
It's the tab called comparisons in the electronic file. It's all the way to the right. I think the issue is it's not updated with final 2020 data, so
No, I
it's only
forgot to
somewhat
update.
helpful.
Well, the issue for me is that all these pages are numbered, and I'd like to know which page number you're
I
talking
didn't
about.
give it to you, Ken. I didn't update the page. That's what I
Okay.
just said. I didn't. It's only on the update it and resend it out.
All
It
right.
would be page 21, I guess.
Yeah, that's the page I don't have.
I don't either.
Okay.
Do
So
you
at the
have,
bottom-
sorry,
Go ahead.
Kim, do you have that? So I'm looking at that page and it said that as of 11/9, we had 9.9 million of revenues, 8.8 of expenditures, so gained 1.1 million this year. Do you know what those final bottom line numbers are with final
Yeah,
2020 numbers?
sheet that I sent.
Oh, the PDF?
Yeah,
Yeah.
it's a PDF file, but it's like the appropriation status report
Yep.
is, let's see,
Okay, I got you. So I just look at the last page of this.
the last page. So it looks like we appropriated 12,381,787, and we ended up spending 10,839,972. So,
Okay.
and also keep in mind, we got over $1 million in CARES Act money that we had to spend. So that was a big part of that. So if you take the CARES money out, we really only spent 9 million.
Okay, and where do I see the revenue then?
Then you go to the receipt account status report behind it. It's all in one file. But if you go to that, so you go all the way to that back page. And we
Okay.
took in net amount received is $10,769,018.49.
Okay, so we were down 70,000.
Yeah.
Okay. Close enough to break even, we'll call it.
Well, once again, there was $1 million of that was COVID money.
Right. So, and that's why you're going to see some
Kim,
of these numbers go way up.
was
What?
in the 10 million number you talked about on revenues, was the COVID money included in that?
Yes.
Okay.
Yeah. Yep. So that's why I'm getting ready to
So
say some of
we're
these
down to
numbers.
70, Larry, or Pete, I'm sorry.
Yep.
Some of these numbers are going to be bigger because we were able to keep some of our money because we paid ourselves back with some of the COVID money. So we paid ourselves back in the fire department, the EMS, and the safety services levy, and we were able to reimburse some of the park salaries. So you're going to see numbers go up in the park and those other three funds that I just mentioned because we were able to take some of that money and use it for salaries, which helped bump our, get us up to our 40 or 50% like we wanted to be. So if you go to the motor vehicle license fund, we budgeted 15.5 and we took in 17,966.24. And then we budgeted 8 to spend and we spent 5. So we're plus almost $13,000 in that one. So that brings our balance in the motor vehicle license fund to 151,805. Does anybody have any questions about that one?
Nope.
All right, on to page 3, the gas fund. So we budgeted 120,000. We brought in 209,510. This is where we got more gas money than we anticipated we would get. Really surprised because I thought with COVID, with that not everybody going anywhere for 2 months, I thought that was huge.
Kim, did you transpose or is my sheet wrong? You said 209.50, 150 or something like that?
That's on the gasoline tax, local highway tax. So we 120. We actually got, if you add in the interest, it's 215,920.
That's the number I have. Okay.
Yep.
I think.
So if you look
just said
down
it wrong.
below, we did 263,800 was what we budgeted, and we only spent 155,446.
So we're projecting a way less gas tax this year.
Well, we did because we weren't going to know what our final numbers were.
I would suggest while you look into it's kind of funny that everybody was staying home and drinking and we got a lot less liquor tax and a lot more gas tax. So something probably worth looking into both of those to try to get an idea for what's going to happen in the future.
Yeah,
well,
hopefully you're not drinking gasoline instead of.
Really.
Haven't gotten that desperate yet, Ken.
well, maybe I don't know. They gave us a higher allocation. I don't know.
I actually think the permit fees are probably, and maybe Ken or somebody would know. I think the permit fees probably are for new restaurants or renewals. The fees are probably down because there's places closing, or they're not renewing, or, there's not as many new places applying.
Yeah, I was thinking that too, but we should probably see if that's the case.
Well, it's written down there as liquor permit fees, so that's a pretty good point to make, Rick. Okay.
So then, let's see.
And what's the capital outlay we have in the budget? Remind me what that was for.
Well, we had 40,000 in there to buy a small dump truck this year, and unfortunately, a lot of things were delayed. So we are still waiting on that truck. We ordered it in like March of last year, and we still haven't gotten it. So the bad thing is it looked good in 2020 because we didn't have to pay for it. But the bad thing is now we're going to get stuck paying for it in 2021, and we had other things planned to buy. So we're going to have to figure all that out. But that's why the numbers look so good in the gas tax fund, because, we budgeted 263 and we only spent 150. Well, that's because the equipment didn't come in to buy it. So,
Kim, where will we reflect the amount of money that we receive by selling the used dump truck?
we won't. It'll be in the trade-in value. It won't show it. It'll show it as a credit on the invoice, but that's it.
Okay.
It won't show it on these finance.
Okay. Just a couple of the expenses for 21 to jump off the page are repair and maintenance and operating supplies. Those are way more than what we spent last year.
Well, you have to remember, we spent them out of 6 different funds. And what I tried to do is consolidate them into one fund so that I only had to go to one fund to pay for certain things. So I spread it out. Like, let's see, operating supplies, the 80,000, that's because 50 of that is salt. So 30,000 is the other stuff. Like everything else we need to use to operate on the roads. Like gravel and dirt and all that good stuff.
But that's still almost 3 times what we spent last year at 11K.
But did you hear what I said? We said before we took it out of all 6 different funds. So this year I tried to consolidate it so it was just coming out of one fund. So I only went to one fund to pay for certain things. I tried to spread it out. So I put all the repairs and maintenance in the gas tax fund and the operating supplies. And then I took other things out of other funds.
Okay.
If you go to my computer sheet in the computer, like what I did is I compared all the road funds and you'll see where things are coming out of them. I compared all of them, permanent motor or permissive motor vehicle, county and township, the gas tax, motor vehicle license, the street levy fund, the other street levy fund. I put all of those side by side, just like I did the safety services one, and you can see where everything comes out.
Kim, is it roughly the same amount as it was from the 6 funds as it is now?
That I don't know. I'll have to look at that.
Yeah, Kim, that was one suggestion I had. By the way, I'm looking at the salary comparison and service department comparisons and safety services comparisons tabs. Those are all great. I think what would be even better is if we could see 2020 and 2021. So if you did a comparison tab for 2021 where you show all the funds together and then did one for 2020, because then we can see here's what we spent in salaries across all the funds in 2020. Here's what we've got budgeted in 2021. And then a lot of these questions we have about why they're going up and down in different funds will be a lot easier to answer. You can just say, go to that page and you can see what the year-to-year changes in total. And we won't get hung up with these kind of questions of why is it going up or down here?
Okay.
I agree. Thank you.
Okay.
Yeah, because those pages, I mean, there's a salary one does exactly what we were talking about, where you can kind of see, all right, I don't have to worry about seeing partial things here and there. I see it all together. So I think we just need 2 years there, and then it's easy going forward. You just keep adding an extra year every time you go, and we can always see the trends.
Okay. Okay, if you go to page 4 under the road fund, the road and bridge fund, this is where we pay all our salaries out of. So this year is going to be new because we're paying insurance and things like that out of this fund. But before, you can see last year we only budgeted 16,300. We spent 16,300 on the, as far as salaries were concerned. We actually budgeted, I think, 21.5 and we spent 18. But this one, you know, we're going to be taking some, I think it's part of the mini excavator out of this one, and then all the other benefits out of this one. So you can see our totals off to the right-hand side. So the cash balance at the end of 2020 was 295,552. And we took in, I think we budgeted, on the revenue side, we budgeted 188 and we took in 194. Does anybody have any questions on that one?
You're on page 4?
Yep.
Oh, okay, I finally caught up. Go ahead.
Okay, moving to page 5 on the cemetery fund. You can see we budgeted for total revenue of 54,000 and we actually brought in 92,163. And on the expenditure side, we budgeted 94,800 and we spent 81,427.67. So most of that was contracted services, which is our mowing. That's what our biggest expense is out of that account. And
Why
then
was the
we have
revenue up so much, Kim?
What's that?
Why was the revenue up so much? Is that something I should remember?
Oh, we had a lot of burials.
Oh, well,
Unfortunately.
okay.
Yeah. You can see we had sale of lots. We budgeted 20 and we took in 21,250. And then under fees, you can see we budgeted 34, but we took in 69,000. So that's our opening and closing costs. So it was also, unfortunately, a very, we had a lot of burials last year.
Kim, our mowing services, we don't use our own employees.
No, we contract out. So you can see based on the bids that we got, I had to bump that number up from 43 to I had to bump it up to 69. So the cost went up significantly this year.
I would like to do something creative next year to solve that problem.
Okay.
We talked about it this year, but we didn't get it in time. But next year, I would like to think out of the box to lower that amount a lot.
All right.
I like that idea too.
Okay. Any more questions on cemetery? All right. Moving on. Page 6, parks. So we received, let's see, on total revenue, we budgeted 623,826. We brought in 634,210. We did get, on the other side, we did get our one ODNR grant before the end of the year. So we plugged that number in. We actually took in less property tax money this year for this fund, but we made it up in our ODNR grant. So we did get the second reimbursement, but we didn't get it until after the first of the year, so you won't see that number until 2021. Let's see, we budgeted 862,900 and we spent 822,457. Let's see, a lot of that, most of that number was improvements to sites. So like all the improvements we made to the ball fields, and then we fixed a lot of our trails last year. We did a lot of park improvements over the last couple years.
And Kim, did you mention that we're starting to take in money from sports teams?
Yes. So next year we did budget. We passed along some of the sports fees that we're going to have. So we're going to start collecting $12 from every family, from every child that uses our fields. So that's a new thing. And we made sure that we told all our recreation people that use it that we're going to start charging that $12 fee. So everyone's well aware of it. So this year.
That's the recreational field fee?
Yep. So that's
Okay.
for next year, for 2021.
Okay.
We got $50,000 worth of maintenance and repairs for 2021.
Oh yeah, you'd be surprised.
Yeah.
Well, we
Well,
only spent 8,000 last year.
Let's see.
But we
Well,
did a lot of improvements to the baseball fields at home.
yeah,
Yeah.
we just did that, what was it, sports turf or something like that? We're putting limestone in the outfield of the warning track to keep down erosion.
Right, but here again, Rick, you got to keep in mind the UAN is totally different in how it classifies things as the OTAS was. So in the Parks Department, the only thing that we kept track of for maintenance and repairs was on equipment. This maintenance and repairs is for everything. So anytime we fix the lights, anytime we fix the equipment, anytime we fix park playground stuff, it's not improvements to sites anymore. It's repairs and maintenance. That's why we had to increase the number.
And Rick, because of COVID, park usage is up 80%. So along with that's going to go more cost, obviously.
Kim, one question on the revenues. Who are the organizations? So I assume when you charge for use of the fees or for the parks or for the recreation fields, you're charging the organization that's renting it, not, you said you charge $12 per family, but is it like Loveland Youth Baseball, or who are the organizations that are using the facilities?
It's Loveland Youth Baseball, and then we have Say Soccer, and then we have a multitude of other soccer teams that use it, like
Lacrosse uses it.
yeah, lacrosse uses it.
So
what
you
they're doing
charge
is dollars on, on their fees, and then they're writing us a check.
Right. They're going to collect it from those families, and then they'll forward that money to us or whatever.
So for the season, you're charging them for the season, if they use it for their season, $12 a person for whoever.
Right. So they have to
Gotcha,
submit
okay.
a roster. So if there's 30 kids on the roster, then it's going to be $12 times 30 is what we're going to use. The problem is now we have to figure out how to divide the fields up, because a lot of these organizations have way more kids than will fit on just our fields. So we have to figure out how we're going to distribute all those fields now that we're doing that. So we've got a lot of we've got big organizations that want to use it. And then we have like this one team, like the one, soccer team that's 10U that wants to use it one night a week. So we have to figure out how we're going to fit all that in together. It's going to be a challenge, but.
Yeah, and we were eventually talking about adding another multi-purpose field in, is it Symmes? Is that the Meadows where the parking lot is?
Right. We've talked about doing that. And then we looked at where lacrosse is right now, and we can squeeze another soccer field in front of the lacrosse box. So we may just let, like a small soccer team use that area. And then we've been letting them use Seven Gables for a small soccer area. But yeah, down the road, we're trying to look to see where we can, put all these extra little fields so that, we can get as many people using our fields as we can.
Yeah, have you looked around at what other townships or communities charge to see if we're charging same amount, more, if we have any upside
It's
there?
all over the board. Like Loveland, they budget a certain amount, and then whatever their maintenance ends up being, they charge the difference. And then Miami Township charges per field. They don't charge per player. They charge like, you want to rent a field, it's X dollars for this field. So I don't know. We may look at that in the future. I don't know. It just depends on, we'll see how this works. And if we need to change it, we'll change it.
Okay,
But this is one of the funds that we actually were able to get a credit back for some of the COVID money. So we were able to credit back some of the salaries and some of the benefits. And then we were actually able to credit the general fund back for like medical insurance and stuff like that when we did that. Because though, obviously we were paying all the medical insurance out of the one fund, and now we're dispersing it. Let's see.
The COVID funds show up under the rollback and homestead?
No, it wouldn't show up at all. It would just be a credit. So it's not going to be on the sheet.
Okay.
It's just going to be a lesser salary number. So you can see where we budgeted 206,000 in salaries, but we only paid out 121.
Okay.
Normally we pay out more because we got credit. We didn't, it's not, the number's not
Okay.
as high.
But we have to justify with the state, or at least with the county, that we spent these things appropriately and so on. So somewhere we must have a summary page of what we took for COVID and where it went, right?
Yeah, you have the spreadsheet. I sent it to you guys.
Okay.
Kim, the meat house, 50,000.
Yep.
What's that for?
We need to make structural repairs to the building so that we can use it as an event center. Because we want to make, right now.
Do we charge for that?
We will, but we need to first fix it. So right now it's only rated for a residential facility, which we can't use for anything. So we want to take it to a use group 4, which allows us to use it for events. So we have to hire an architect to come in, analyze, what all needs to be done to the building to make it so that it can be used for events. And then the trustees will have to decide, what kind of fees do they want to charge people to recapture, the use of that building and all the money we put out that way.
We don't know that $50 will cover all the repairs.
It's a beautiful house. And I would like to see something done to it. So right now, it's not doing anything. So
Right.
we need to fix it up so the people of Symmes Township can enjoy it.
So we're basically paying insurance on it. We can't even.
Building code wise, it's residential. That needs to be bumped up beyond commercial to assembly. Assembly is the highest building use code wise. So it needs to be bumped up to assembly, number one. Number two, in that feasibility study that Kim distributed to everybody that we did a couple years ago, if you turn to the back of it, it specifically talks about Mead House, and there are a number of structural issues related to the foundation before we can use it. And then on top of that, it's not ADA, and it doesn't have sprinklers. So we're easily talking 300,000, and it could be higher than that. So we're just at step one. We're doing baby steps. The building's locked. We can't use it. So we need to put out, publicly advertise a request for qualification for architects, like Kim said, get someone who knows how to deal with a historical house and do these conversions, and then we'll just have to break the work down into pieces that we can afford. This is a labor of love. It's not.
Why is
exactly
contracted services? Why is contracted services going up so much?
There again, every time you hire a contractor, it has to be labeled as contracted services. So before, the UAN classifies stuff totally different than the OTAS system does. And we didn't have a classification called contracted services. So now we have to take some of the line items and kind of squish them all together. That's why it's so much higher. It's just a totally different system, accounting system. So we have to follow their line items and what they mean.
Hey, while we're on the discussion of the meat house, I just want to share, I don't want to say it's my opinion because I haven't seen all the information, but from looking at the feasibility study and seeing some of the things, I mean, I love the historical preservation aspect of it. I would just ask you to think about how much money it's going to take to get that usable, how much we're going to get once it's usable, and comparing that against things like the building you want to put in to be able to get the vehicles indoors and extend the useful life, and how much that costs, and just do a cost benefit assessment on where do we want to spend money first between those two, because it's, again, I love the historical preservation. It'd be great to have a facility for events, but it's an awful lot of money. And when you think of what else you could do, it just seems like it's pretty expensive for what we get out of it in the end. Again, I'm just saying that without seeing all the information, so don't take it as like I've studied this and I'm telling you what I think the answer is, but just at a glance, that's my only advice is think about where we want to sink our money and what it's going to do for us in the future.
And what is the alternative to not fixing it?
I don't think we have a choice. I mean, it's a historic building. We can't just not fix it.
That's why I asked my question. If it's on the historic register, you can't tear it down, right?
Right. We don't have to turn it to assembly use, but we would have to fix it just so it can even, well, I mean, I don't even know what the heck we do with it. I mean, we can't use it for anything as a structure.
I mean,
That's the question, is if we don't use it for anything, how much would we have to pay just to keep it standing? And is it worth it for us to do what it takes to get it there?
yeah.
Right. I hear what you're saying.
I'm not one in favor of spending money on it to just keep it standing. It's a continuing expense under those conditions with no return. And I don't know what kind of money you're talking to just keep it standing, but.
Yeah, I think that's the right question, Joe. And I wasn't framing it as you should do this. I would just suggest to look at those two options and then think of what else you do with the money that you would use to get it up to assembly and how much you might make from it. I mean, eventually, if it can be a revenue source, maybe I'm wrong, and it's a good investment to make for the township. I just don't know. It seems like a lot of money to put in for what we could get out of it at some point to use it as an assembly house.
Yeah.
That's all. I don't know if
Well,
the
that's
other
why we
finance
have-
committee guys have any thoughts on the subject.
I would suggest doing some more research on that tearing down of historic buildings, because I just looked it up and it says owners are not prohibited from demolishing their National Register listed building.
Not?
Not.
Restricted? That surprises me.
So
If it was demolished, we would face pig's forks. People love that building. They would come out in drones to crucify us. There's no way. We can maybe that's something that we need to look at. Tearing it down is not in the. No, that couldn't happen.
For what it's worth, we had a very similar building when we lived in Anderson Township house, and that was in constant use. It was hard to get time in there. It was, and I believe it's still the same way. So I do think it would be used. Really nice property, and but yeah, I think Jody's right. I think we'd have some very upset township members if that got torn down. I do understand the concerns for sure.
Dan, is that the one they
Yeah,
use for weddings?
that's a special building. We just need to plan out. I mean, I think we've been given a gift basically with that meat house. We just need to go about it the right way. And yes, it's expensive, which explains why we haven't done anything in the past, 8 years. we've just sort of done the bare minimum.
Okay, I mean, maybe a subject for us to take up at a later time once you've had a chance to maybe do some more research on it.
Joe, just FYI, there's a tax incentive program nationally. You get a tax credit of 20% when you rehab historic properties.
But you have to maintain it in a historical manner.
And
get
it
that-
has to produce income.
And you get
But
what?
we don't pay,
20%?
we don't pay
You get a
tax.
tax incentive. There's a federal historic preservation tax incentive, 20%.
But we don't pay taxes. So we wouldn't get it.
That's kind of an owner gets that kind of credit when they rehab it. But they have to maintain it to a certain standard.
Right. But it doesn't apply to governments because we don't pay taxes.
All right, sorry if I took us off course there. I thought I wanted to just hear some thoughts on the subject.
No, it's good to always keep in the back of your mind. I think we were just going down the road as we have this building. We need to maintain it and we're going to put money in it to maintain it. We might as well use it. And the only way to use it is to take it to that assembly use like Phil was saying. So.
Sounds like we've got some other properties around town that we can see what kind of income they get from it and help us figure out how much we might want to put into it.
Yeah, that would be Anderson Township.
Yeah.
They have that house.
I think Glendale, I think there's some other towns that have some historic buildings they use this way too that we could look at.
We'll have to ask Anderson. I don't know if their park district owns that or if the township owns it. Because they have their own separate park district.
Yeah, they do. I'm not sure who that was.
Okay, on page 7 on the ROSI fund. So we budgeted 497, 286, and we brought in 503. Or I'm sorry, 553, 695 is what we total revenue. And then 557, 082 is what we actually brought in. So we were a little over on property taxes and a little under on the rollback. As far as the revenue side, or on the expenditure side, we budgeted 57, 975, and we only spent 575, 444. So most of that, the biggest part of that is paying back that bond that we have to pay back the property loan. So you can see it's almost 500,000 that we pay just for the loan.
Well, we supplemented our state grant by 165,000 for improvement of sites too, or whatever was budgeted.
Yeah, 94. Some of that is mowing. Yeah, some of that's mowing, and then some of it is the park.
Well,
mowing
is up there in contracted services. That's a little higher.
Oh, you're
up.
right. Yeah.
Yeah, Jody, I can't wait to hear how you're going to reduce contracted services mowing.
Yeah, I have some ideas.
Well,
Yeah, I mean, that's 81 grand this year versus two last year.
we may end up having to put our employees back in the field mowing.
I think goats are a good answer.
Goats.
Yeah, then you can milk them too.
Got it. Oh my God.
Judy, what were you saying there? I think you got cut off. I was kind of interested in that too.
Ideas like the park services, they do what's called natural grassing. They cut 6 feet in and then they let the grass grow a little higher in the middle, and it's good. I'm sorry about my dog. Someone's out there shoveling snow. They only cut so far in, and they do natural grasses. So that's an idea. We don't know if it can work. I would like to have some of our park maintenance cut some of our parks. I think we could reduce that down. So we talked about it too late, and I didn't. Sorry about my dog. Too late, and we didn't get it done. Next year we will.
Do you have, okay, well, I can talk offline about that, like what parks you're thinking that would work in. Because I could see a lot, maybe some of it in Symmes Park, it would work really well to do something like that. Maybe certain parks at Home of the
But
Brave.
that's something we can talk about. We don't have to talk about that tonight.
Okay,
We'll just work on that later.
okay. So our cash balance is down to 289,546 in Rossi. And then we will be getting that, like I said, we got that capital grant reimbursement that'll show up in 2021. And then moving on to page 8 for the police, our total revenue for 20 was 929,356.50, or I'm sorry, the budgeted 926,260, and then we brought in 929,356. So we brought in a little bit more than what we budgeted. On the expenditure side, we budgeted 894,692, and we spent 881,349. So let's see. Yeah, and just so you know, this year we had to pay 13 police bills because of the new billing, how it cycled. So we ended up paying 13 months of police bills because we were behind from 2019. So that's why these numbers seem kind of high this year, but it should be back on track for 2021. Let's see. I don't see anything that jumps out. So like contracted services is going to be our dispatching, and then payment to another government, that's payments to Hamilton County for the sheriff's contract, part of it. And then of course their other biggest expense is fuel. So any questions on that? Nope. Okay. Page 9 on the fire department. So we budgeted 947,762 in total revenue, and we brought in 959,770. So this is also one of the funds where we were able to give ourselves a credit in the salary or the contracted services line item. So that's why our you could see how our cash balance in 2019 was 115,000, and our cash balance in 2020 was 420. So we were able to give ourselves a pretty good boost.
Yeah, but we
in
had
this
levies.
fund to.
We had levies that were passed for both police and fire. If you remember, safety service levy. Didn't that bring in
This
more?
is just fire levy. This is not safety services. This is fire.
Okay, all right, gotcha.
So to give credit back. But on the expenditure side for budgeted 2020, we budgeted 968,086, and we only spent 655,058. So that was good. Let's see, I don't see anything that jumps out.
Why was that down so low, Kim?
What's that?
Why was that down so low versus the budget? The expenditure?
Because we were able to give ourselves money back with the COVID credit.
Okay.
And so what we did is since we pay LSD out of, or LSFD out of, it's the EMS, fire, and safety services. So what we did is how we paid them out of those funds is how we credited ourselves back. So like one fund got 20%, one fund got 30%, the other fund got 50%, which obviously the safety services is the one that shares the line or has the lion's share of the money. So that was like a 50% credit. And I think it was the fire fund that got 30 and the EMS that got 20. So that's why those numbers are up. Plus, we ran low on money in the fire department money and the police department money. If you guys remember us talking about this, how we ran out of money about June, and then we had to switch over what we were paying out of safety services levy. So that's another reason why this balance is higher, because I didn't go back and credit it. I just left it in the safety services levy and then moved everything. You know, once we got our money in October, then I started paying money out of that fund in October. So that's what also why that is high. Is there any other questions on that fund? Okay, page 10, road levy fund. We budgeted $550,600 or $550,600 in revenue, and we brought in $629.37. So then let's see, on the expenditure side, our total expenditures were budgeted. We had $813,720, and then we spent $842,739. So, and a lot of that was, let's see, the road program, we spent a little more than we had budgeted for. And that includes like striping. And then we also had the Belong project that was in there that, we had a bunch of change orders for that. So that's included in there. And then we had sidewalks. So it looks like we budgeted $221,290 for sidewalks, but they actually ended up costing us $233. So, and that was because of change orders and things like that, which always happens. That looks like that's it on that side. We did receive the $85,360 from the county for their contribution for paving. Let's see, was it Union Cemetery? Yeah, we paved, yeah, I think it was Union Cemetery this year that we paved. And that brings us to our cash balance of $622,099.04. Does anybody have any questions on that one?
Nope.
On page 11, this is our road levy number 2, which is the streets one for personnel. So you can see we budgeted $250 and we spent $266,585. A lot of that was because we went over on salaries on this one. I didn't realize it, but last year we had 27 pay periods. So we had 3 pay periods in January, 3 pay periods in July, and 3 pay periods in December. So we had an extra one in there. So we went a little bit over. Let's see, I'm trying to think. So of course that may because the salaries went over, we went over in PERS. And then, so anyway, on expenditures, we budgeted $254,800. We spent $269,432. So you can see our balances off to the side. The balance is $152,425 for total. And this is one of the ones where we're going to split it all out, like for Medicare, medical, life insurance, dental, vision, and that other and the like. Any
So
other
Kim, we're gonna get less property tax this year than we did last year?
Yeah, they took us down. I think it's to 97% of what we took in last year. That was a letter from the county. I mean, it could always come in higher. They're just, you know, when we get our certificate of estimated resources, we just have to use the numbers that the county gives us. And we got a letter in October saying we're only going to certify everyone at 97%. So that's why those numbers are less.
But 97% of last year would have been 256.
Well, I'm just going off the number that the county gave me, Rick. I can't use any other number. They give us the number and that's what we have to put in our certificate.
Rick, if the budget was plugged in based on the county input for 2020 at 250,000, it's only dropped to 248,612 for 2021. It's what you collected versus what they projected you were going to collect is where the difference comes in. I would say that the 248,612 versus 250 is like 97%.
Probably. But we can't exceed the number. Like they give it to us and then we can't exceed it.
97% of 250 is 243.
Right. But then probably a new property or two in the mix too.
They just send all the numbers and that's what we have to plug in.
Yeah, they give you a percentage because they think that there'll be so many defaults with this kind of economy and there are people out of work. People are going to delay and be delinquent on taxes and what have you. So they don't think you're going to collect as much as what they ended up doing.
Are there any other questions on that one? Okay, page 12, EMS levy. So we budgeted total revenue at 619,477, and then we actually took in 664,439. So you can see the biggest, we took in a little bit more in property taxes. We took a little less in the rollback, but we took in a lot more in our medic fees. So those are all the transport fees that we took in this year. So obviously we had a lot more transports this year due to COVID. On the expenditure side, we budgeted 652,601 and we only spent 482,342. Again, this is one of those funds where we gave ourselves a credit with the COVID money. We backfilled it with salaries or money that we spent to that we, paid to LSFD. So we didn't, you can see we budgeted 537,065, but we only paid him 403, but because we paid ourselves back. I don't see anything else that jumps off the page. We came in under in medical supplies, which I was kind of surprised at. We budgeted almost 23,000 and we only spent 18 or 17.5. So that was kind of surprising. So our balance goes up in that fund. So now we're up to 507,808 where we were at 325 in 2019. So that's good. It's building that fund up like we wanted to. On page 13, the safety services levy. And this is where we did collect, let's see, this year we budgeted revenue wise, we budgeted $1,805,895. And we got, we got 1,799,126.65. So you can see we brought in a little more money in property taxes, but we didn't get near as much in the rollback. So I don't know how that works. Why we get less unless people just aren't paying their income taxes at the state. I don't know why that fluctuates so much. And then on the expenditure side, we budgeted $2,495,378 and we spent $2,131,876. So you can see, and this is also one of the funds where we credited ourselves back for the LSFD contract. So we budgeted 1.2 million and we only spent $1 million. Like we gave ourselves money back for that. So our balance, this is one of the funds where we were, where we were going down, like $700,000 to $800,000 a year. So we were getting low on a balance, but because we gave ourselves the credit back, we brought that balance back up to 1.9 million, where before it would have been almost right at $1 million. So in the next year, projecting to collect our new levy. Yep.
Kim, who is Ed?
Ed is our he is our service department employee that does all of our maintenance and all of our buildings. So he spends a good part of his time doing maintenance at the Safety Services Center and at Remington.
Okay.
So this year, start taking some of his salary out of the fire fund, out of the safety services levy, because he spends a lot of his time doing that. I don't think there's anything that really jumps off the page. Um, like I said, because we ran out of money in the police department and the fire department in June, I had to switch a lot of the stuff over to this fund. And that's why you see like other, the 599. That's why it went from budgeted 37,000 to 105, because a lot of the stuff that we couldn't pay in the other two funds, we had to pay out of the other column in this fund. So, but hopefully that, since we've righted our ship with the balances for the other funds, we won't have that problem in the future.
Kim, can you answer a question on dispatching contracted services? We budgeted 672 and spent 707, but yet for next year, we're projecting 321. Is that just due to different splits for different funds?
Yeah, I think it probably includes other stuff. It probably includes other contracted services other than just dispatching, if I had to
Okay.
guess.
The line below it? You're talking
Yeah, I
about-
probably didn't break it out.
Okay.
But like all the other stuff is going to be like, let's see, it looks like, who was it other? Emergency reporting, IT services, it looks like. But like, it's also like all their other contracted services, like we contract with an exterminator and we have to pay that out of that. We contract with Elite Fire Services for all the fire extinguishers. We contract with plumbers and electricians and that kind of stuff to fix things.
And the monthly maintenance on the 9 computers or whatever?
Yeah, that's in there too, the IT service, because we have to contract with Bellicor.
Okay.
Yep, and I'm
Did we mention to everybody that our fire department got the highest rating that you can get in the country this year? Did we mention that?
oh yeah. I don't know if you guys have seen some of our newsletters, but this year the Loveland Symmes Fire Department received an ISO rating of 1, which is the highest rating that you can achieve for ISO ratings, which affects all of our property insurance. So everyone in the township should benefit from a lower property insurance rating or cost due to that rating. And it's several factors that they look at. They look at the equipment that we have. They look at our water supply throughout the county or throughout the township. They look at our training of our people. They look at how many people we have. There's just a number of factors, like all our dispatching, like what programs we run. There's just a whole number of factors. But they're one of 383 companies across the United States that have achieved a #1 rating, which is fantastic.
Yeah, that's great. Saw it in the newsletter. Looks great.
Yep. All right. All right. If anybody has any more questions on that. Going on to permanent motor vehicle license, 2231, page 14. So we budgeted for total revenue 81,250 and we brought in 60. So this is one of the funds where we saw a dip and money coming in, but I suspect that was because the BMV was closed for 3 months and you couldn't get in to get your driver's license renewed or your license plates renewed. And then they also said, okay, we're going to give everybody 3 months reprieve to catch back up. But maybe people just didn't catch back up yet. I don't know. Because we, obviously we were missing about $8,000 out of that money that we typically get for that. Actually, 2020, wait, I'm sorry, I'm reading that totally wrong. We budgeted 60 and we brought in 95. Last year before that, we brought in 77. So we must have, this is our license plate fee for the township. So that's our $5 extra fee. So I'll have to make a note to change that revenue for that.
Yeah, the other MVL fund is the one where the revenue was down, Kim. 2903.
Okay. So that's the county one that we get. So you can see on the expenditure side, we budgeted 41,000, and in 2020 we spent 31,000. So a lot of that too was we didn't get that dump truck yet, so we have to pay for it out of this year's money. And then we had also budgeted to replace a bigger dump truck. So the fund balance in that is right about where it always is, 136,483. So we're not down. Like we were 19,000 in the plus. Or no, 65,000 in the plus. Yep. Okay, on page 15, the fire and rescue fund, we only had $70 in revenue in that, and we didn't spend anything. So it's still at that cash balance of 35,784. On page 16 for lighting.
Kim,
we budget-
quick questions on page 15. That $35,000 we have sitting there, can we use that for expenses?
Yeah, this has to be fire and rescue related.
Well, there's tons of fire and rescue related on the other pages. Why can't we just use that money? I mean, it looks like we've been sitting on the same amount of money for like 3 years in a row.
Yeah.
I mean, unless there's some reason we can't use it, I say we just use it to pay some of our fire and rescue expenses.
We could, that'll be up to the board. I mean, we can, I was just gonna leave it in there until maybe we have to buy a big piece of equipment, and then we can use it. But makes no matter to me. On the lighting, the total revenue for 2020 was 130 is what we budgeted, and we took in 136,707. Under all the expenditures, we budgeted 170,300. We spent 141, and that a lot of that was my error in the middle of it. I thought we were gonna spend way more than I thought we were gonna spend, so I had the trustees up the appropriations, but I didn't need to increase it as much as I did. So that's why you see that big difference there. So last year we spent, what was it, 137,867 to Duke Energy, which we should probably, I think I increased it a little bit to 140, but obviously we won't know what those numbers will be until we get all the bills in. That's the bad part. So fortunately we have money in that fund, but you can see how our money's kind of going down in that fund. Like in 2019, we had 69,000, and 2020 we ended up with 64,000. So we can use that, you know, as a cushion for a little bit, but you know, here in the next, I don't know, 10 or so years, we'll have to probably up what we charge people to make it so that we always have enough money, so we're never having to go backwards.
Is this the fund that we advance money into
We don't need to anymore.
to pay our bills?
We don't need to anymore since we
Okay.
have money in. But we used to do that.
Okay.
All right. Moving on onto the special improvement district. This is the one for energy, the energy district we created for 5 seasons. So the total revenue that we budgeted was 93, and the actual revenue was 92,340. So on the expenditure side, we budgeted 93 and we spent 91,40, which left us with $500. So, or I'm sorry, we spent, 91,840. So that leaves us with $500. So our balance in that account comes to $1,500. And I can't remember what, I thought it was a 10-year time period, but I'm not sure on that. I'm gonna have to go back and look at the contract to see how long we're in it for this. It might be 15 years. And I'll have to find out, like at the end, what can we actually do with the money in that fund? Like if we end this fund, can we put it in the general fund later? Because I honestly don't even know what we'd spend it on out of this fund unless we did something energy related. You know, like maybe we buy solar panels for one of our parks. That's the only thing I can think of to do with it. Which is something we were looking at.
I would love that.
Yeah, so maybe we just save it in there and maybe we pick a park and we decide, okay, what park is our biggest expense for electricity, and maybe put solar panels in that park to offset the cost. That's something for us to think about for the future. So on the TIF district, page 18, the total revenue that we budgeted was 814,000. And you can see we only brought in 787,684. And my guess is when they sold Sam's Club to, what's the new place, At Home,
At home.
that they
Yeah.
sold it for less than what the property was valued at previously. And that's why we didn't collect as much tax money. So the property value went down, so therefore we collected less. So on the expenditure side, we budgeted 942,749 and we spent 832,062. The biggest part of that was the bonds. So, and then this year is our last year that we will make payments on this. And then our bond will be gone for the safety center, which is good. But our biggest
have some-
expense. What's that?
Kim, do we have some legal fees coming this year?
I always plan for it just in case. And then we have to pay a tax collection fee, and then we have engineering fees. And then our biggest expense this year will be the sidewalks. And then we had some other capital outlay. I think we bought 2 police cars this year. We had one was planned and one was not because we got wrecked. And then we bought some other equipment, I think, for the fire department to get to that 177 number. That's pretty much it. Oh, and that 25,900 we spent on engineering. So we paid that to Choice One when they did all the engineering for phase 1. So anybody else have any questions on that? So it looks like our balance in that fund is $2,363,833.09. So next year it looks like we'll spend more than we'll bring in, only because we're doing the sidewalks. Under the county permanent motor vehicle license on page 19, so we budgeted 45,000, and then in 2020 we only brought in 29,000. So this is the permissive motor vehicle license tax that we get on the county portion. So we received 30% of what the county receives in their $5. So that was, this 20,000 is our portion. So you can see it's much less than what we brought in the past. I have no idea why, other than delayed registrations is the only thing I can think of. Let's see, on the expenditure side, we had budgeted 52,000 and we spent 52,000, well, a little over 52,000. What was our biggest expense? Looks like equipment and operating supplies. Yep. But we went from, in 2019, we had a $71,000 balance, and now we have a $114,000 balance. So that's good. Does anybody else have any questions? This is probably also one of the funds where we were going to take a piece of equipment out, but it ended up not coming in. All right, last page, cemetery bequests. We only got $300. No, we actually got $199 in interest. So that's all we got in that fund. We spent $13,725. We made some improvements to Union Cemetery. We had to replace or repair some pipes that we had underneath some of the driveway entrances that we had coming into the cemetery. So we had to make those repairs. And then next year we plan on making improvements to the Union Cemetery chapel there. We have there's some leaks in the building, so we have to repair the brick. I don't know, and we'd have to probably hire an architect for that too, to try to see, you know, like what repairs need to be done to that building to bring it back to what it needs to be. So that's it, unless anybody has any questions.
Jim, just from looking at the safety services comparisons for 2021, it looks like if I try to remember back to the projections we were doing when we were recommending the levy, it looks like we're doing a little bit better in terms of having revenues stay ahead of expenses. I know we were kind of with inflation expecting to see a point where it turns. Is that
Right.
Is that fair to say, or is that all kind of one-time COVID benefits we got that you don't think are there? I mean, it's good news that we're still you know, taking in more revenue than expenses for now, because we know expenses are going to keep going up potentially.
Right. Well, for now, we know it's a one-time expense. I don't know what's going to happen with the Biden administration, if they're going to give out more COVID money to everybody. I mean, you just don't know. So for right now, you know, it was headed on a downward spiral, and then it kind of spiked, and then we might see it level off, but then we might see it go back down again, because, you know, our expenses always go up. They never go down, unless we make drastic changes to make them go down. But the biggest reason is because that boost of COVID money that we got to reimburse ourselves. But of course, we had to give some of it to the fire department for their overtime, because their overtime was through the roof. I think we reimbursed them like almost $60,000 for their overtime, because they were doing well, and then till October, and then almost their whole department got COVID during the months of October and November. So their overtime went through the roof like the last 3 months of the year. So we helped them out by reimbursing them. Loveland gave them some money, and then we gave them some of our COVID money.
Okay. Yeah, no, I was just looking at our, I guess our total annual expenses are 5.3 million, and we've got 3 million in cash balance. So we're at, you know, 60% of the annual cost, which is a little bit ahead of where we want to be. So.
And I'll update that page. Probably need to update that page too.
Okay. That's not through 12/31.
Yep. I think it's only through 11. So I'll update those summary pages.
Okay. Yeah, I think that's the only other request I had, is to update the summary pages and then put a 2020 page as well, so we can see both years for those. And then I think we'll be able to, you know, hopefully have some of these conversations a little bit more efficiently, because we'll be able to pick exactly what we want to talk about instead of going through each page.
Okay.
Kim, I have a question.
Kim, I had a question actually on the property taxes, and I know we're backed up a little bit. You said it surprises me we're getting less property taxes when I thought almost everybody's values went up this year, particularly in a place like Symmes Township.
But remember, they're a year behind, Mike.
Yeah.
So this in 2020, we're paying on 2019 values. So they actually won't go up until this year's collection cycle.
Okay.
But also have people that didn't pay their property taxes too. So if you have delinquencies in certain funds, I mean, there's no way to avoid that. And then sometimes you will see, especially in the lighting district, you'll get it where you'll get delinquent money from like 2 years ago that people are finally catching up to and paying their taxes, or somebody's paying back taxes on a house that was sold or whatever.
Do you have any idea how much I mean, I would think the values have gone up significantly on this last assessment for this township. I mean, I think the revenues should be going up considerably more based on that, but do you know about that or any idea?
I don't know what the number is because I actually need to contact the auditor's office for another issue, but I can ask that issue.
They went up, taxes went up 15% on average, 15.
Is that for Symmes or is that just for the county that you saw?
That's for Hamilton County.
And that's why I'm wondering what the Symmes number is, because I saw that same thing.
It's always higher.
Right. And that's why I'm wondering if there's going to be a significantly more amount of revenue coming in.
One would think.
Yeah.
Well,
I'd be interested in that for projections for the next year or so.
Yeah.
Right. I'll ask, I was going to call Greg Jarvis and ask him how that works. So
You might want to try and get that in writing. It's complicated. Just because the property is reevaluated and at an increased cost or increased value, let's say, doesn't mean your taxes are going to go up.
right, because you only levy a certain amount of money. So if you only levy one bill, there's a certain ceiling that it goes to and then it comes back down. That's why everybody sees that little bit of credit on their tax bills.
Right.
But I just don't know what the formula is, how they use that. That's why it's important for all of our business community to stay as high as possibly, as that possibly can, because they pay the lion's share of it.
Kim, quick question on the Safety Services Center. What's
Yep.
our property and casualty insurance bill for the Safety Services Center?
Let's see, last year I think we paid. Last year we paid $26,539. So this year I budgeted 30. So I don't know what it'll, I don't know what our renewal will be yet. I won't know until like the last week in February what it's going to be.
So here's my question. Sycamore Township, how much of that do they pay?
They don't pay any of our risk insurance. We pay it.
So we're assuming the liability for Symmes Township? Is that what I'm hearing?
We
For
assume liability for
Sycamore
our
Township.
No, we assume liability for our building. The sheriff's office assumes all the liability for their personnel. So if anything happens to their personnel, they are covered under their own insurance. It's only when it deals with our building. So like if the roof falls in, or we have a lightning strike, or we have a fire, that has nothing to do with Sycamore Township. We have this big building that we have to insure. Doesn't matter who's in it. It just matters that it's still our building and we're still responsible for providing insurance for the building as a whole.
So again, it goes back to my question. When are we going to start sending Sycamore Township a bill for use of our?
That's up for the
Rick,
board.
you and I just talked about that this week. We're going to
Please.
do an assessment. Kim and I just talked about this week. We're going to look at the percentage of personnel that belong to Sycamore
Yeah,
versus the percentage of personnel that belong to Symmes. Let's just say, hypothetically, I don't know this for a fact, but by the time you add up the fire folks and the sheriff folks, maybe Sycamore is, I don't know, say 10, 15%. That's just a wild guess. And then apply that percentage to our utility bills. I don't think we can charge Sycamore to pay our mortgage. It's our building. It's our mortgage. It's our mortgage insurance, et cetera. But, the fact that their people are sitting in our building using the lights, using the heat, using the air conditioning, using the water and the sewer, we have a good reason to ask them to pay for their share of that. So we're going to calculate that and then run that past Sycamore. I will personally talk to Tom Weedman and Tom James and explain that in such a way that it would be hard to say no to. Because whatever.
How many
it is,
years,
it's not gonna be
how many years
now.
have they been there?
I don't know, 10 years maybe.
That building's been there since 2006. So they've been there since 2006. But before that, they were in our services building,
Yeah.
like service department. They were in that building. And before that, they were in our administration building.
And back when those were there, we actually had 3 townships. We had Columbia operating out of District 3 with Sycamore and Symmes.
Yeah. I would suggest that maybe we schedule a special meeting for this committee and then we meet at the safety center and you guys can walk through the building. You can see what operations go on there. And then we can have the sheriff's office do a presentation about why it's important for them to keep all their people together and what it does for us, like the benefits for them, benefits for us. I don't do it justice when I explain it, but last week when I met with the sheriff, I made that very clear to her that, you know, we've been having these discussions with our finance committee and that it probably is a good idea for them to come out and explain to us why it's so important.
Can they also go to Sycamore Township and explain to them why they need to pay us money? We got a new sheriff in town. I mean, Ken, you're laughing, but this is serious. I mean, they owe us money.
I'm not laughing.
Rick, I said I was going to meet with Tom Weedman and Tom James. And
Yeah, but you're just
explain
talking about
their
utilities.
percentage of utilities. Correct. Unless we're going to put them on the actual mortgage?
They're using the property.
That's not right. They don't own the building.
So they're renting, they're using it. I mean, if you have a rental property, you charge people.
You push, and we're more than happy to do that. But I've had discussions with Tom Weedman. He's like, if we're gonna pay all this money to you, it's not worth it to us. We'll just come use our building, and we're gonna have 2 separate things that make it more chaotic.
Yeah, but that's all talk,
If you
Jody.
just limit it to the utilities,
When push
an
comes to
easier
shove, they're
discussion.
not gonna do that. And the sheriff's department's gonna step in. They're gonna tell them they don't want them to do it. So we've got some leverage
may
here
very
that we
well
need
do
to
that.
use.
Sycamore has a new sheriff in town too, Rick. And Tom Weedman doesn't call the shots anymore. So they've got 2 hyper conservative people that are driving the board. And they make a lot of crazy decisions over there. And it would not surprise me at all if they said, fine, we're gone. And maybe we say, okay, good riddance. But, you know, if we at least approach them with something that they can't say no to, then we're getting something out of them, and we can look them in the straight, you know, right in the eye with a straight face and say, this, you owe this to us.
I have another question. I would be interested to know how much money we would actually save if they weren't there, if they left.
We won't save any.
Would our expenses go way down?
No, our expenses would be the same. We'd have to still heat it and cool it. We'd still have to turn the lights on. We'd still have to use the water. I mean, we're not saving anything from them not being there.
And can I just add, the sheriffs are there maybe 10 minutes in the morning, 20 minutes in the afternoon before they leave. It's not like they are in the building. They get their stuff and they go out.
Right. And they pretty much only come back twice. And they're gone
so
for
it's
12
not
hours
like
at a
they're,
time.
you know, using our computers and our energy. They're not.
Phil, tell them you want to make the utilities retroactive. 14 years.
I'm not going to, I'm not going to do that, Rick. That's not right. Unless we want them to
What's
leave.
not right
If
is
we
them
want
not
to
paying
leave, then we
anything.
get nothing. If we want
You
them
know,
to leave,
this is not a
then we
fair
get
and
nothing.
reasonable situation.
well, guess what? You know, I'm not going to go back in time. Okay, maybe we made a mistake by not doing something, but all I can do is going forward, do some corrective action.
And they're gonna tell you no, and then you'll back off.
If they say no, then we have a reason to ask them to leave. If it's that important to us to recoup, you know, whatever this amount is. It's not going to be a big dollar amount, but you know, over 20 years, it'll add up.
I can tell you what they're going to do. They're going to start charging us for the lieutenant position. They're going to start charging us for Amy's position is what they're going to do. Because we're saving them money by only having to have one supervisor and one clerk.
We're not charging the sheriff. We're charging Sycamore.
Right. But what I'm saying is if you push out Sycamore, that is going to force them to be in 2 separate locations for District 3, which means that they will have to have a supervisor in Symmes and they will have to have a supervisor in Sycamore, which
That's
will cost
speculation,
them.
Kim. You don't know that for a fact.
Okay.
We'll take it one step at a time.
I mean, Rick, how much money do you think this is going to save us by charging them rent? So is it worth going to war with our neighboring township to make $5,000 and make them unhappy? I don't know.
$5,000 a month, 60 grand a year.
What do you think?
But
I mean,
only
Jody,
costs
if
us
you have a
about
rental property, you're going to let people stay in it for free?
But they're not staying in it for free. They're contributing. They're part of our they're part of the sheriff's department.
All right, let's move on.
Okay. That's all I had.
Can we quickly talk about remind us our next meeting and what the topic is so we can get ourselves prepared? I know we kind of booked everything.
I think it's May.
3 months, isn't it?
Yeah, I think it's like the second week in May, the second Wednesday. And we'll be talking budget for 2022.
May 12th.
May 12th. Okay, great.
Are we going to talk at all tonight about the garage for our vehicles? Or are we just going to ignore that again? You know, I asked this committee a few months back what your idea was on your reason for being and whether it was exclusively to examine budgets or was it also involved with strategic planning for what's needed in the future? I think one of the important things that's needed in the future is housing vehicles worth hundreds of thousands of dollars that are not. I think it's important to address the fact that we are not EPA compliant in how we handle those vehicles, and like water from washing them not going into the storm source that does. If you read, one of the things that bothers me about that report, that evaluation, is if you read that, there are a number of factors that whoever did that evaluation brings up related to safety factors, which to me translates into possible liability issues that the township could run into because of some of the deficiencies in the building. Both the fact that we don't have a garage and the fact that we have an old administration building. Now that building can go on for years, but it's going to need money put into it as we go along. We all know that. And it is not going to last forever. And all I'm asking is to look at, I don't know what all means are possible for planning for and funding an adequate building. And I would hope that if we at some point in the near future build this garage that we need for our vehicles, that it's done in a manner of planning that it can be joined with a new administration building, if that ever comes about, rather than worry about changing the building we build and losing money on that because we can't adapt it to adding anything else. You know, so those are things that I think are legitimate concerns for all of us. And I would like to have some, not now, not tonight necessarily, but I would like to have some opinions on what we ought to do with this, you know, and from this committee in the past, you know, I've heard negatives about spending any kind of money on those two issues. But I think eventually we have to face it, whether we face it now, 10 years from now, 15 years from now. Like, I don't know. Does interest money that we earn on our investment, does that have to go back into funds? Can that be put in a capital account that goes towards paying eventually for whatever facility we need in the future? You know, our administration building is not ADA compliant. Now I know that it's grandfathered in. I know that there are protections involved in that. But if something happens with the safety issues that are brought out in that report and some slick attorney gets hold of it, I don't know that us being grandfathered in is any big protection for our township. I'm not a lawyer, so I don't know that. But it's just, I just think these are issues that should be discussed, and I don't hear them discussed.
Joe, what do other townships have for garages for the vehicles? Do we know that? Is there like an inventory available to see?
Well, yeah, I'm sure there are. You know, I've talked to Bill, who heads up our department there, and I asked him if he would be willing or would desire to like meet at one of these meetings. He said he couldn't be there tonight, or I'd have called you and asked you. You know, going to him would be the place to go for, at least in my opinion. I mean, for the information on that sort of thing. He's probably well versed in what other departments such as his have in this area or in this county. So do I know the ins and outs of it all? No. But I do know that there are some EPA guidelines and that dictate that, for instance, when you wash a truck and all the salt comes off it and all that, it does not go into the sewer system, does not go into the water supply. It has to be captured. We don't do that. You know, we do it out in the backyard. And there are other things, I'm sure. I mean, they're space tight, and with the big trucks, there's almost no way to put them indoors anywhere to work on them. But it just disturbs me that we have hundreds of thousands of dollars invested in that equipment. And, you know, I know one of the trustees said to me today, well, how much of a cost benefit as far as extending the life of those vehicles go would it be if you had a proper housing structure like that garage versus the way it is now? And I mean, I have a double car garage. I like my cars in there when I don't like it out in this kind of crap. I have to think that there's a value to that. But it's not only just having them under roof, it's also having them in an area where I'm sure they do a lot of work on those vehicles themselves, you know, where they can do that. You know, they just don't have an adequate facility now. But I also would like for you to look at the safety issues that are brought out in that report, because I think that's important.
Joe, to answer your question, I think that as a finance committee, we should be involved in those strategic discussions. I think, you know, we should be looking at where the biggest financial impact to the township is and spending our time there. And that's clearly, you know, big capital investments like that are one of those places. I was kind of referring to it a little bit when we had the discussion on the meat house of, you know, if we had if we had money to put into something, would we put it in a garage for the vehicles or would we put it in historic restoration? And I think it's still a good discussion to have. I would kind of lean toward the garage myself, but I don't have all the information. So I think maybe we can target in our May meeting to get some more information on what those options would look like and kind of have a more strategic planning discussion. And I think, you know, the way I've experienced it in the corporate environment is you always can have those long-term strategic master plans, and then you always can have a separate discussion on when do I put it in action and when can I afford it and how do I prioritize all the different master plan investments. And, you know, in that way you would say, yeah, at some point I have to replace every building I've got. They're not going to last forever. So then you start to map out, when do I think it makes sense to do that? Which ones are the biggest priority? And we kind of build from there to come up with a plan on when we would do everything.
The capital improvements master plan.
Yeah.
And just so we're clear, I mean, you know, since I know I was at some of those meetings, I don't remember anyone laughing it off, by the way, but I will say that some of the things that were brought up that I thought made sense was, instead of building something, looking into existing structures that could be used. And then I think that was kind of the way it was left. So I know I didn't laugh it off. I don't remember anybody else doing it at the time, but you know, I think that was an option, particularly if there's vacant buildings that could be used or converted. I think that was a good thought, but it never really went anywhere after that.
Yeah, I mean, just to throw on a further 2 cents, I think, Kim, you know, some of the things we've talked about on getting some of the report summaries done, that was kind of my thinking there, is if we have those all in place, we can spend less time in the weeds in these discussions because we can analyze it all ourselves beforehand, send you the questions in advance and get to a point where we can say, okay, let's answer all of our, you know, what's this 50,000, what's that 50,000, and then spend our time together on some of these bigger picture questions. So that's why I've asked for a lot of those things, and I think we've come a long ways since I've been on. I don't remember if I was here when we had those first facility discussions. It's kind of about the time I joined the group, but I think that'd be a much better use of our time. I think we'd be able to help the trustees a lot more by giving that kind of guidance than haggling over the line items in the budget, which we can answer ahead of time. So I think, Joe, I think you're right on. Let's do it. And let's try to find a way to carve out the time. So instead of trying to do it at the end of a 2-hour discussion on budgets, we can dedicate a little bit more time and energy to it. It'd be great, by the way, as well, if we can actually get there at some point in the future, if we're able to safely meet in person to go do a tour and walk through and make sure we kind of see all the stuff that they're talking about in the reports.
Yeah. I'm good with that. You know, just if we can open a dialogue. And I mean, the trustees authorized that study to be done. I don't know what occurred at that time that made them do that, but it was a necessary move. But I just think it's died. I'd like to see it resurrected.
We did it in 2018 because we first started having these discussions about the garage. So then the suggestion was, well, why don't we do a feasibility study to find out what we actually need and versus what we have.
Yeah.
And then we also added in the Mead building at the same time because that we knew that we were having structural issues with the building. So that's how the feasibility study came about. And that was done at the end of 2018. And they had the presentation in 2019, like in January at the trustees meeting.
So Kim, can we set the agenda in May and start with a facilities master plan discussion and then go into budget approval discussion? And I think if we can get the budget information ahead of time, we can make that discussion a lot shorter and accommodate both topics. Everybody else good with that?
Yeah.
How soon do you want it in advance?
I think
'Cause
if,
I gotta start planning for that.
yeah, I think 2 weeks is enough for me. I mean, when you sent the file this time, if it would have had those extra things in it, it would have been plenty of time for me to review it all ahead of time and be
Okay.
ready with questions.
Okey doke.
All right. Thanks for bringing that up, Joe. It's important stuff to talk about.
Yeah. Thanks for your input. I appreciate it.
Anything else on the agenda, or we're good to close?
We're good?
Okay.
All right.
Have a good night.
All
Yeah.
right. Thanks, everyone. Thanks again, Kim,
Yeah.
for all the work prepping us for this meeting. We appreciate it.
Thanks, Tim.
Okay.
Take
All
care.
right.
Thank
Thanks.
you.
Yes.
Good
Yeah.
night.
Bye now.